So it's being recorded, and we are hoping that we are not going to have any internet challenge anymore. And okay, let's just quickly go through a little things, some of the little things I've talked about before. Some people are here, which I know the statistics in front of me shows that some people that are here do not have much knowledge about the forex trading. And back then, I told you that if you want to have some little knowledge about forex trading, just go to club9forexacademy.com and you'll be able to see this set of videos. This set of videos are free introduction to forex beginner course, the forex market hour, choosing your broker, taking trades, etc. All through down here. But by the time you keep on going down, you see that there are premium videos that talk about the candlestick, the chart patterns, the Fibonacci, Elliott Wave theory course, and we are going to be looking at a whole lot of things right here under the Elliott Wave theory course. And I'm also going to let you understand the major reason why you need to focus more on Elliott Wave and why it is usually profitable when you know them. So you can go through the course to Elliott Wave. You also have the volume spread analysis, the market structures, the oscillators trading, the pivot point. There are a lot of courses right there. But for those that don't have any knowledge at all, I will not be talking about what is forex and all that. Just go through them at your own pace. It's free for you to register and watch them. So let's go to what we want to talk about. There's something interesting that I want you to know, and that is what you need to focus on most of the time. And the fact is that when price when you want to try to understand what price needs to do next, you need to have an understanding of what it has done. And most of the time, you are going to be looking at if it has made an impulse or if it has made a correction. And as a matter of fact, the people that knows or the people that make profits trading the forex market are those people that understand how to trade the correction pattern. Now, when I say correction patterns, I'm not saying that you are supposed to be trading within the correction patterns. No, I'm saying that you are supposed to know the formation of the correction patterns and when it is going to be complete, so that you can be inside the trade before the next impulse move. So when I say impulse move, I'm talking about something like this. Price make this move to the upside, then after some time, it started doing this kind of movement. Now, if you are not in the trade early enough, you are going to get inside the trade when it is already moving massively in another direction. After the completion of this correction pattern, for instance, you should expect that price can then still do something like this again. So you want to be in the trade somewhere around here so that you are not left out of the trade of the move that price is going to eventually make. So those are the concepts that we are going to be looking at today. And then when price keep on moving in this kind of manner, when it keeps on moving in this kind of manner, it's not going to keep on doing that forever. After some time, if you get to a certain point, then it will slow down and then start turning. So there are two things you need to learn if you want to be profitable trading the forex market. One, identifying how to trade the correction patterns. Then two, studying how price turns. That means when price have made movements in one single direction, it's eventually then going to turn in another direction. So you need to study how it's going to turn so that you are going to be in the trade before it then turn and move in that expected direction. Now, a whole lot of victory traders, when they first start, some of the problems at which they go through is that they used to join the trade when it has already moved. That means they used to join the trade somewhere around here or somewhere around here. As a pro trader that you are supposed to be, you are supposed to have an understanding of where the correction pattern is going to start from and then move before even price starts getting to make that major movement. A whole lot of retail traders are actually they are reactive traders, so to say. That means they only react to price. They are supposed to have an understanding and insight of what price should do way in advance. And which is why you see that some of you you follow indicators, and indicators are going to be giving you signals at the very late period, or they are going to be repainting. In my own case, for instance, I have exposure regarding trading with indicators. I started with trading indicators just like you guys. And after in fact, If I tell you how many indicators I've seen in my life, it's over 10,000, and I'm not lying. But then I got to realize that you cannot the trading indicators cannot be wiser than your eyes. You need to have an understanding of what price wants to do. Then you can use those indicators as a confirmation of what you already have in mind. So what I'm saying in essence is this: the way the market makers trade. Market makers do not trade because indicators, the RSI or the MACD is turning overbought over. So no, they have an understanding of where price is going to in advance, and they are well prepared before price get there, and they are doing things in such a manner at which they are the one controlling the market. So if you don't think in that direction also, you are going to be most likely trading against them, and which is why we find out that we usually find ourselves burnt most of the time. I would just advise that we keep some of our questions to the end of the period. Then we'll have section where we're going to be looking at question and answer. So with this concept that we already have in mind, by the time we go to our chart, it will be very easy for us to understand what to expect in the price. So this is what price have done. I'm looking at dollar index right now, and I am on the daily time frame. On the daily time frame, remember I told you that we must always start from the weekly time frame, then from there we go to the daily time frame. So based on the concept that I told you before, just look at exactly what price have done right here, so that you understand how to read charts by yourself and don't just depend on indicators. By the time you know and understand how price moves, then it will be very easy for you, even if you are going to be using trading indicators. I'm not condemning any trading indicators. I'm only saying that you need to have an understanding of what price is going to do before it does them. Now look at this, for instance. Look at this chart. What you can see right here is that price made this move to the downside. Then what happens after making that move? It made a correction. After the correction, what happens? It made this move to the downside, it made a correction. After that, it made this move to the downside, made a correction, made this move to the downside, made a correction, made this move to the downside, made a correction, made the move to the downside, made a correction, and here, and after that, it's done. So what I'm saying here in essence is this: if you understand the way price moves, you understand that what you need to just focus on is how to be in a trade when it is correcting, so that you are not left out when price is making this major move to the downside in that scenario. You want to be in this correction right here, so that you are not left out when it's making this move to the downside. This is the weekly time frame, and you can imagine how many pips you are going to be getting from that movement. Look at the correction right here. We have a WXY correction, then price made this move to the downside. So if you understand the concept of the market, it makes it very easy for you to be able to know where price is supposed to go to in advance. The rule is very simple: impulse, then correction, impulse, then correction, impulse, then correction, until when price gets to a certain level where it is then going to start turning. That is the basic principle you need to understand about Elliott wave. Even if you don't know how to do all these wave counts, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, all those jargon, sometimes you don't need them. And sometimes you even need to take away all this labeling and have a clear view of what price is doing. As a matter of fact, what I can see right here is that this is a major movement to the downside and price is correcting. Then after that, we are expecting this major movement to the downside. It's quite simple. You don't need to make it complicated for yourself. And with this, I can see that we have something that looks like this, and we have something that looks like this. So most likely what we can expect right here is that price may eventually first go to the upside to complete this wave movement that we can see right here, then eventually turn. So the principle that you can see on the higher time frame is the same principle you are going to see by the time you go to the lower time frame. Oh, my audio is breaking again. Okay. Okay. Let me just try to change. What about now? Is it better? Is my audio level better now? Okay, anytime this happens, just let me know. I can easily switch to different mic right here in front of me. Okay, so as I was saying before, that's the same concept that we have where price moves, they make a correction, move, they make a correction. move, they make a correction, move them. That is what you need to first understand in trading the forex market. Forget about the indicators that you have right there. All you just need to do is to learn how to be inside the trade before within that correction pattern before price make the next move that it's supposed to make. You want to be in the trade within this correction pattern before price make this move that it wants to make. So I'm saying that even without doing any label, without doing any Elliott wave count, sometimes the Elliott wave count can be quite confusing, and all you just need to do is to focus on the market structure. That is what you are going to be learning if you come to this course right here. We can see that after we went through Elliott wave theory course, we then say, okay, let us even forget about all this counting. Let us just focus on the structures of the market, which is what we are going to be doing right now. The structure right here is only showing us that price has made an impulse to the downside, and then it is correcting. Then after that, it's supposed to make the next impulse to the downside. That is the simple thing you need to first understand. The rest, forget it. So, and I'm saying right here that this is what you can see. That in this case right now, this is where I can see that price has respected this upper trend line, and it's also respecting this lower trend line. That is also expecting this lower trend line. And with this in mind, there are two things that should happen. Is either price reject this entire zone and go up to retest this upper trend line, which is the upper resistance line, then flux down from there, giving you the exact kind of structure that you can see in this smaller correction. Impulse, price make a correction, then coming down. So the same thing is what you have here, impulse, then price making a correction, then coming down. If you look at what we have right here in front of you, you can see the whole of this is impulse, and price is within a correction pattern, and after that, it's supposed to then flush down from that stop. So if you understand this concept, by the time we keep on going on to how to take the trade and also other analysis on the daily time frame, 4-hour time frame, it's very easy for you to understand. So this is the weekly time frame, and this is the wave count that I've done. We have an impulse, then price is making a correction, and most likely is going to make the next impulse to the upside before then flushing down, based on what I've explained to you before. So let's go to the daily time frame and see where price is. Now, if you remember that the last time we talked, we analyzed this dollar index, I told you that you should look up for this level. There's very high probability that price is going to be rejecting this area, and that was what exactly happened. Which is why you realize that Euro USD and GDP USD sold off this week that we were. And I'll give you guys the signal right there in the group, not the signal, so to say, like a trade setup that you guys should watch out for it. So if you see this kind of chart, this is how the professionals look at the chart, and they are able to understand what price wants to do. Price does not move randomly. No, price does. That some people say that forex they are just gambling. If you don't understand this, yes, you are gambling. If you don't understand, if you don't know, you are going to be gambling. So when you see certain things happen, even before this one happened, this move to the upside happened, we already had an understanding that this is supposed to happen. And by the time you go to your chart, maybe to the 4-hour time frame, you will see that we had a reversal pattern right here that lets us understand that price is going to be respecting that zone. And the same concept is still what we had here. Look at price made an impulse, they made a correction, they made an impulse. Very simple and very easy for you to understand. If you just follow that basic principle, it makes it very easy for you to be in the trade and not close your trade too early. So I'm going to go to the MT4 right now, and we are going to look at dollar index on the daily time frame. Now, this is the dollar index on the daily time frame. Now you just take this out. The dollar index on the daily time frame, and the same thing that we have seen that we just saw on the training view is what we have right here. So I'm going to reduce the size so that we'll be able to see price action better. Now, price has been moving in this manner. They made this correction and made this move to the upside. Impulse, then another correction, then impulse. And now it's looking as if it's going to be respecting that zone. why is it likely respecting this zone? Now, I'm going to draw a key level right here, and you can see that immediately price got to that place, it keeps on respecting it. Let me go back into history so that you'll be able to see how far price actually respected that zone. And if you want to draw key levels, you are going to be using 2 lines so that you don't get confused. So if you look at it right here, price was moving in this upward manner. It got to this area, it rejected it, and then came down. When there again rejected it, came down. When there it rejected it. So it has kept on rejecting that. It went up again, retested that zone. It went up again. Let me just take this out. It went up again, then rejected it. It broke it significantly, came back again, rejected it, came down, went up again, retested that zone, went up, came back again, rejected it, then later broke it. Then after that, this is where we are right now. This is where we are right now. You can see that it's actually a major key area where price has actually been respecting and rejecting. You can see that price keep on rejecting it on several occasions. So this area gives us an interesting area where price may most likely respect. So I'm going to just diagnose this level right here, this area. Okay. So with this right now, and based on the Elliott wave theory, Elliott wave analysis that we discussed on the weekly time frame right here, we could see that there's very likely that price is going to still go up before then coming down. So by then, okay, I didn't share that screen. GDP dollar index weekly time frame. So I was saying that with this, we can see that there's every likelihood that price may still get to this area, then come down. So if you go back to your MT4 right now, this is the same level that we are. So I'm going to increase the zoom and then go to the 4 hours time frame. Now on this 4 hours time frame, remember I told you that when price has gotten to an area where it may turn around, you need to start looking out for reversal formation. There are lots of reversal formations that have been dealt with. There are lots of reversal formations that have been dealt with in the academic portal. So you can go there, but right here, the major reversal pattern that I usually follow is the Henry diagonal and also the shoulder head shoulder pattern. And as you can see right here, it looks more likely that we had something that looks like a shoulder head shoulder pattern right here, and the price seems to be breaking out of this zone completely. Now, we don't know yet if price has broken it or if it's going to be a fake out. We don't know yet. We are going to know by the time market opens on Monday and see if that level is going to be holding or not. Now, even right here, you'll be able to see that we have something that looks like an inverse shoulder head shoulder pattern by the time you go to the lower time frame. Price does not just move and just move like that. No, it moves based on the prints that you can see, that a whole lot of professional traders can see, and when they see them, they already know what is supposed to happen next in the market. So this is the 1 hour time frame, and you can see that we also add an inverse shoulder head shoulder pattern right here, SHS, and here being the neckline. Price broke out of this significantly from that level. It broke out, we tested that area, then went up. So what I'm saying in essence is this: based on the analysis that we did on the weekly time frame, we were able to see that there's a possibility that price is supposed to keep on going up. There's a possibility. Remember, it's always a possibility. No one knows exactly what is going to happen in the future. And when it has to do with forex, nobody controls the market. We only speculate. So we had an understanding that price may eventually go up. So all we just need to do right now is to try to look at the trade setup that confirms our expectation on that weekly time frame. Right now, we are on 1 hour time frame, and we have been doing the analysis from the weekly time frame to the daily time frame to the 4 hour time frame, and now we are on the 1 hour time frame. And this clearly looks as if dollar has gained strength, which is why you saw that Euro USD was selling, GDP USD was selling, Australian dollar was also selling. So with this right now, all you just need to do is to try to understand how to trade it. I'm going to be drawing something right now, and it will also let you see how professional traders look at the market to determine what is going to happen next. So you draw this trend line right here, and you also draw this trend line right here. It's very easy for you to see. So what this suggests in Elliott wave is that we have something that looks like a leading diagonal. For a leading diagonal, we have it, it's usually in 5 waves: wave 1, wave 2, wave 3, wave 4, wave 5. And all of these will amount to wave 1. So when you see this kind of stuff, you are not supposed to take the trade. For instance, we have said, okay, price wants to keep on going up. That price may most likely go up. It doesn't mean you need to take the trade. No, you need to still wait for price to get to the level where it's going to reject it. Then that is when you can then take your trade from that spot. Based on this structure that we call leading diagonal, a leading diagonal usually first break is to make it look like a fake out. You can see I'm drawing something that looks like an inverse shoulder shoulder pattern right here, making it look as if price will keep on going down. So if you don't understand structures very well, you will be taking a sell trade when you are supposed to be looking for a buy trade. Now, don't get me wrong. I'm not saying that right now the price is going to go up. We are still trying to determine, we are still trying to find out whether or not price is going to go up or down. But the structure that we are looking at in front of us is going to let us know if truly it is going to go up or down. So for this structure, we had a leading diagonal, then we are supposed to have a correction. Now, for it to be the wave 2, price is not supposed to go beyond this level for a proper rejection. And the maximum rule is that it's not supposed to make a new low. Remember, what we are trying to do right now is to try to understand if it wants to go up or if it wants to go down. So right here, we'll expect that price comes down here. So even if you want to take this trade to the upside, you want to wait for it to get to this level first and then look for a rejection. That's the first scenario. The second scenario is that you want you to break this area, this lower support line, and reject it around this area. That's the second scenario. So what this is going to give you in essence is that if you go to your higher time frame, a whole lot of all these ones may most likely then be an inverse shoulder pattern. This is going to be the shoulder and this is going to be the edge. Then the movement that is going to be making right here may eventually give you the second shoulder, and you can then look for your rejection right there for you to go long. This is dollar index. We are not buying it. We are just using it as an understanding of what to expect by the time we go to the euro US dollar and the GDP US dollar. So for me, by the time market opens, I'm going to be looking out for 2 scenarios. The first scenario is that it rejects this area. That means it comes here, reject this area, then bounce up. It confirms that dollar is going to be strong. The second is that it comes to this area, and bounces up. Then it gives me a confirmation that price is going to, that dollar index is going to be strong. Alternatively, what we are supposed to always do in Forex is very simple. You hope for the best and then you expect the worst. That means you have an understanding of what price wants to do. Then you also have it at the back of your mind that price may not eventually do that. So that when price is doing the reverse, you are not caught unaware. So as I have analyzed what I'm going to be looking out for in the bullish setup, I'm also supposed to look at what I'm supposed to be looking out for in the bearish setup. The bearish setup is very simple. If price is going to be breaking below this level and want to keep on going down, then it needs to show us a reverse. It needs to show us a structure right here that confirms that it plans to break this level below. Remember that this is the key level. This area right here is the key level where price needs to break. And when price wants to break a key level, it needs to first pull up back a little. It's just like when you have a catapult. If you cannot fire a catapult very well if you don't really stretch it to the back. Stretching it to the back will give you that firepower for you to be able to release it and go where you want it to go to. The same concept is what you're going to be seeing right here if price wants to break this level. It may first be doing as if it is going up, in which case we are not going to be having impulse movement here anymore. The difference is usually whether it's going to be impulse or not. That's what is going to give you an understanding of if price is going to be going up or is actually correcting. So if it's going to be correcting, and wants to break this level, then this is what we need to be looking out for. I'm going to go back to the 4-hour time frame so that we see it clearly. So this is what we need to be looking out for in if it wants to break it below. We are going to be looking at this structure. Remember that, remember what I told you before, when price is moving, it makes an impulse, then it corrects. It made this correction, then it broke down. Then after that, most likely it's going to then be giving you this kind of correction before it then breaks it down significantly. So this is what makes that level, this is what will make that level break. As it's been doing this correction, a whole lot of other professional traders can already see, they already understand what is going on in the market, that price is going to be breaking this level. So all you just need to do is to wait for the structure to be complete. And once it's completed, they will just take their trade. And that's why you see that there will be next impulse that keep on going down. If you don't understand this concept, you'll be taking trade. For instance, if you are using indicators, an indicator can come here, then give you a buy setup around here. Meanwhile, you are supposed to be looking at possibly this kind of setup for you to go down. So even if you have an indicator that you are using, what you need to do is to have an understanding of the market, then you use that indicator as a confirmation of your expectation, but never the first rule for you to take a trade. So with this right now, we understand what we expect price to do as regards the dollar index. By the time we go to the US dollar, Euro USD, and also the GDP USD, then it will become clearer. A quick review of what we did last week, right here. Let's quickly go back to, I posted all this setup in the group. This was what we discussed in the last webinar. I told you that Euro USD pull back, sell, then we are going to be buying. GDP USD pull back, sell, we are winning. This is what we arrived at, and that was exactly what price did. This is Euro USD. Price came down here, then went up, which is the sell I told you about, then the buy. Immediately it got there, I told you that if price gets to this level, we should be looking out for a sell and also for a divergence around that spot. And by the time we go to our chart, we'll be able to see exactly what price did. The next one is the GDP USD. I gave this confirmation, a trade setup that price is supposed to come all the way down here, then go up. Then I also let you know that this is just like a final move, that after price have broken out from this structure, you should be looking out for a sell from that spot. That was exactly what happened. Euro JPY, the same thing happened on Euro JPY. I was expecting that price is going to get to this area. Then the reason why I didn't give a buy signal around here, was because of what I explained to you in the last webinar. We saw a sharp pattern on the daily time frame, and it looked more likely that price was going to respect that sharp pattern, a very sharp pattern. I gave the set signal up to this point, but eventually what happened is price just kept on going down. I told you also that yen is supposed to be strong, which is why we are going to be looking for a sell setup on Euro JPY and GDP JPY, and also CAD JPY and Australian JPY. Those are all the setups that I gave you during the week, and that was exactly what happened. This is GDP JPY. I told you to watch out for this. That price is going to be giving you a two-way correction, then possibly give you an inverse shoulder head shoulder pattern to flush down. The first TP, however, was supposed to be here. What eventually happened was that price got to this area. When immediately price got to this area, it went up, then broke it significantly. We are going to look at the review of that one too very soon. Then GDP JPY. Okay, this was the alternate GDP JPY that I told you about. Immediately it got to this area, I told you there's a possibility that you can do a pullback up, then flush down. Remember that this is the 15 minutes time frame. On the 1 hour time frame, this will have been the shoulder head shoulder pattern, where this is the first shoulder, the head, and price coming all the way down here and pulling up for the second shoulder, then flushing down. That was exactly what price did. If you go to your chart, you see it there. Then US dollar CAD. I gave you the setup right here, so that US dollar CAD is supposed to reverse. And the reason is because we expect that the crude oil is going to be pulling back for some period. And there's a negative correlation between US dollar CAD and the crude oil, which is why this setup. If you go to your charts too and go and check US dollar CAD, that was exactly what happened. Pound oil, this level was actually a very strong level for pound oil to break. And I told you that you expect price to reject this area. the price will reject this area, possibly up to this level. Now, this is where we are currently. If you go to your chart, you will see it. And there's a possibility that price is still going to get there and then give us a correction. Remember, we are going to be looking at impulse, then price making a correction, just the way I just analyzed to you that if price wants to break a level, it may first give you a correction pattern so that you can have a firepower for it to eventually break it significantly. The next one is, okay, this is the US dollar card. Okay, the US dollar card was what I gave you here. I told you that it was making it look as if it's the correction pattern. Then price was moving in this impulse, then making a correction. Then after the impulse is over, we should be looking for a reversal to the upside from that spot. Do we still have anyone right there? So that I just keep us waiting. Okay, Australian JPY, the same set of AJ. Price did exactly what I told you, then came down. This is where price is currently. If you go to your chart, you see that. So almost all the things that card JPY, the same thing. Price came down all the way down here. I told you that you should look for a sell, then a reversal, then a break. So almost all the things that we discussed right there was eventually what happened. Euro AUD too did the same thing. Let's go to our chart and see some of these trade setups, and then looking at the review of last week, then we'll use it to have an understanding of what eventually happened. So this is the 4-hour time frame, and I'm going to try to go back to where it was before, and this is where we had last. This is where we were last week. This was the trade setup I gave you guys, where I told you that price is supposed to go down right here. I gave you the signal that it's supposed to go down right here, then go up. And after which we are going to be getting to see a divergence, which is why you see that I usually have my RSI around here. I have my RSI and I also have my ATR right here. So immediately price was moving to this upside. The momentum indicator was giving us a divergence, a slope to the downside, giving us a confirmation that price is going to start selling up from that spot. And we were able to profit from that sell too. GDP, okay, let me just go serially. Euro JPY. On Euro JPY, on the daily time frame, we saw that we had a sharp pattern, which is this sharp pattern. If you remember, I told you last week that you should watch out for this sharp pattern, and that we are going to have a confirmation by the time we break this low. This is the 1, 2, 3 candlestick formation. This is the first candle. Then you have a doji candle, and then you have the third candle. A break below it will give you a confirmation to the downside, and that was exactly what happened. Let's go to the 1-hour time frame, and you'll see exactly where I gave you the setup for the sell signal. Now, the reason why I'm going through all this is because I understand that a whole lot of you, by the time I send the trade setup, I've not been sending signals anymore, and I have my reasons for not sending the signals for now. But when I send the trade signals, a whole lot of you don't understand how to take the trade setup, which is that I'm doing this webinar so that by the time you go back, or by the time I send the next signal setup, you'll be able to know what I had in mind, and then even by yourself, you can use it to have an understanding of what to expect in the market. So look at this right here. We had a divergence. Price was moving upwards, but your momentum indicator right here was already slowing down. So it's going to be giving you an understanding of what price may eventually do, which is the fact that you should be looking for a sell signal around that setup. So I gave you guys the signal around here. I gave you guys the signal around here. I think as at that time, we were having, let me go to the, okay, this is the 1-hour time frame. We're having this, and we're also having this right here. So this level actually represents the distribution zone. If you go through the volume spread analysis in my course, you'll be able to understand what I mean by the distribution zone. And that's where it can get confusing. Sometimes when price have gotten to the end of the move, it will still be looking more like it's going to keep on in the direction at which it was before. But your understanding of the analysis from the higher time frame will let you understand whether this level is going to hold or is not going to hold. On the daily time frame, we saw that the sharp pattern got completed around this area. And as a matter of fact, the 1, 2, 3 candlestick that I showed you on the daily time frame is this. This is the first candle on the daily time frame. You may not understand it well, but if you can look deeply, you will understand it. Just look at it right here. This is the first candlestick, and the doji that you saw on that daily time frame is this one. And then the third candlestick is this. Now, a break below this is what forms the shoulder head shoulder pattern that leads to this break right here. And right now, we seem to be having a correction pattern. Price has made this impulse to the downside, and it is moving within this correction pattern, which is why you realize that we had a harmonic pattern that led us to the end of this turnaround point. You don't just take trade because an indicator says so. You need to first understand the structure. Price came all the way down here, then it wants to correct. That is when you can go with this kind of setup. So it gave us that reversal, and you expect that price may most likely be trading within the range for it to further go down. The next one that we talked about was Euro AUD. And if I go to the 1 hour time frame, you'll be able to see exactly where I gave you this trade setup, which is here, right here. Price was moving upwards. Then I told you that I should be looking for a rejection around here for this move to the upside. And if you look deeply also, you will be able to see the same setup, which is the inverse shoulder pattern, where this is a neckline. And most likely what price is doing right now is to come for a retest of this same neckline that it broke, then possibly go forward. It's making this next correction for the next impulse move to the upside. So if you understand the concept and the reading of the market, it makes it very easy for you to have an understanding of what price is supposed to be doing next. The next one is GDP USD, and right here you can see that I'm not trying to explain things to you based on. You see that this is a divergence. The indicator gave us a sell here, then we took a sell here. It reached our TP. No, that is not how to take trade. You are only going to be using this divergence, for instance, for you to know that you are possibly in a reversal state, and then you start looking for your entry from that spot, not because the indicator has given you that entry. So right here, this is what we have right now, and this is what we have right here. So price was actually giving us an any diagonal formation, which is the wave 1, the wave 2, the wave 3, the wave 4, and then finally the wave 5. A flush from there then took us down. So it means that if you look at this setup very well, you'll be able to know when exactly to look for your entry, which is exactly around this zone. I've not even plugged in the pivot point yet. If I plug in the pivot point, you'll be able to see that we had a confluence of the weekly resistance one exactly around that spot. That gives you a confirmation that price will most likely be respecting that zone. And that was what even gave me a whole lot of profit. I took this trade up to this area. I closed this when it got to this place. Then I was expecting that it's going to be making this correction. So what we can expect right now is that if it's going to go down, then it has made this impulse, then most likely it's going to be giving us the correction pattern for the next impulse to the downside. We are going to be looking at that soon. So this is just the review of what we did last week. For GDP JPY 2, I told you that we should be looking at, in fact, GDP JPY, we've actually been taking the trade, and even GDP USD, we've been taking the trade for quite a long time right now. Remember that in the other previous webinar, I drew this, and I also drew this. And I was telling you to expect that price is going to be going to the upside based on this formation. It has made an impulse, then it's making a 5-wave correction, 1, 2, 3, 4, and 5. Then after the quick wave, what happened? Price eventually blasts upward. So if you understand that concept, it makes it very easy for you to be able to take that trade setup. And the same thing is what we are going to be looking at right here, inverse shoulder head shoulder pattern. Price got to this area and then made a little correction, then blast off. After that, this was where what we now discussed last week. Let me go to the 1 hour time frame for you to see it well. So right here, I got an alert with my divergence indicator that there is divergence around this spot. So it gave me a very good opportunity for me to be in this trade. And at the time I was giving you guys the trade setup, I think price was somewhere around here. So I was telling you that you should be looking out for a shoulder head shoulder pattern that is going to eventually flush down. Somebody was chatting me up in a group that he got in late. I was like, how did you get in late? I gave you this setup even before this whole thing happened. Price was exactly around this space. And I was telling you that you should look at the formation and it's going to flush down. If I go to the chart, to the to this GDP JPY, this one, this was where price was. So I don't know how somebody would have gotten it late. Look at price was not even here. I was even thinking this way what price was where price was. This was where price was, and based on that experience, you can see I was able to even predict that price is going to be making a two-way correction right here, all the way down to this level. This move alone is going to be giving something around 700 pips. If you go to your chart, you can try to confirm that. So I don't know. Then after this trade setup too, I gave another one that price is going to be breaking down from that structure, which is a shoulder head shoulder pattern. So you can see that price doesn't just move. And when you're trading forex, if you know what you're doing, you are not gambling. You are able to understand what price wants to do way before it does them. I didn't give any trade setup on GDP card because the trade setup was not clean enough. We didn't even analyze it the last time, and it was because I could see that we are not in a clean setup right now. GDP AUD. I gave you guys this one too, GDP AUD, and I think this was where we were somewhere around here. We were somewhere around here in the last webinar, but I didn't give the trade setup. The reason why I didn't give the trade setup is because the setup is not clean enough. Remember that on the daily time frame, we were able to see that this is an impulse and price is only going to be making a correction possible up to that point, then come down. So when you want to start trading within a correction, you need to be careful because you may think that it's going to get here and then get here and keep on going all the way down. You don't want to be caught unaware. So you want to take that trade just short trade. So then just keep your questions down to later when we are done. We are going to be having a long section today. I'm actually ready for you guys to work very well today, which is why I even put it on a Saturday at 4 p.m. And we are supposed to be having this quite periodically. So this is GDP AUD. And if you go to the 4-hour time frame, you will see that we are trading in a correction pattern that's going to lead us to the end of that correction pattern that we saw on the daily time frame and the 4-hour time frame. And price may most likely going to do this, come down, and most likely going to go up. Then after that, you want to be in this trade so that you can be in the next move to the downside. Then we also look at US dollar card. Now, the US dollar card had an interesting signal, and this was where we were last week, right here. We were here before this move to the upside. And if I go to the 1-hour time frame, you'll be able to see it clearly. You'll be able to see it clearly. So right here, you can see that we have something that looks like this, and we have something that looks like this, giving us an ending diagonal formation. If you understand the structures, it will not be very hard for you to be able to see. Now this is the 1, and this is the 2, the 3, the 4, and the 5. Price rejected that level upwards and made that bullish move eventually. And then if you go to the daily time frame, you understand the structure there too, that we had something that looked like impulse, then we had a correction and impulse. As a matter of fact, we've been following this trade up around here. In the other previous webinar, I told you guys to be looking out for the next move to the downside because I can see that clearly we are in a correction pattern and price is supposed to break down into that level. And also because US crude oil is going to be strong. If crude oil is going to be strong, it means that CAD is going to be strong. And if CAD is strong relative to the USD, it's going to be dragging the chart down. And right now, what we have gone through all most of the things that we talked about in the last webinar. AUD also, we are still expecting it to get to this place. I told you guys to look out for itself around here. AUD JPY, the same thing. We're somewhere around here on the daily time frame. I told you it had the similar setup with AUD USD, and in fact, it even sold more than AUD USD. So I took the AUD JPY because I knew that yen is supposed to be stronger compared to Australian dollar. So let us now have an understanding of what before I proceed, do we have any questions? Before I proceed, before I even start going to what to look out for in this coming week. Any questions so far? If you have a question, is either you are in a very quiet place so that I can unmute you, or you are going to send your question as a chat. So Thunder Pitch says yes sir, that he has a question. So I'm going to unmute you. Just hold on. I'm trying to search for. Okay. Yeah, I'm not being able to unmute you. I don't know why. So, okay.
Yes,
Can you hear me now? Okay, yeah.
Yes. Thank you very much, sir, for the information so far. What I want to know is that I see how you're drawing the head and shoulder pattern and several other strategies. I mean, several other patterns on the chart already. What I want to know is how apart from just technically analyzing all this stuff on the chart, is there a way that you can be able to know the strength of a currency before stepping in to place your order, maybe buy or sell, whatever, on the chart? Is there a way you can know before stepping on the chart to do some of this technical analysis?
Are you saying you want to have an understanding of the strength of a currency without looking at the chart at all?
Yes, if possible.
Well, that may be for the fundamental trader. You know, we have two sections to trading: the fundamental part and the technical part. For me, I am more like 90% technical. I hardly go to try to look for what news is going on there or what fundamental is riding elsewhere. The reason is because whatsoever is happening at any particular point in time, if you go to your chart, you'll be able to have an understanding of what is actually happening. And the reason why I don't usually go with the fundamental is because they are more like confused people. You will get to hear one analyst saying that because of one news somewhere that dollar is going to be strong. Then you hear another one saying because of another news right here, dollar is going to be weak and all that. But if you go to your chart, the chart don't lie. You'll be able to see exactly what to expect. I don't know if I'm able to answer your question. I don't follow through fundamentals. So if you want to get the strength of a currency pair without really going to your chart, then you need to start following up on news and the fundamental factors.
Fundamental farm?
Yes, that means you go to Forex Factory, you look at the news that want to happen, that want to be released at a certain period of time. You look at what news were released prior to. You look at what was the effect of that news on the chart, on the currency pair. Then you use that to have an understanding of what we're expecting going forward.
All right, sir.
You understand? Am I able to really explain what you, or you are still not clear?
No, I'm okay with it, sir. I'm okay. Thank you very much. I appreciate it.
Okay, all right. Is there any other question before we do the analysis? I think there's no other question. And so we are going to go to the, go back to the, let me try to move you back now. Okay, there are some people raising up their hands. I can't really see those people raising up their hands. Okay, live something. Just hold on. I think there are some people raising up their hand. If you are raising up your hand, can you try to send a chat so that I can see that you actually want to have ask a question? Okay, please, what network is this? I think we should just go on. Is my audio level very good? Is my audio level okay? Okay, audio is fine. Okay, somebody says he has a question. Let me just try to live on. Okay. Yeah, hello. Hello.
Hello. Good
yes,
evening,
I can hear you. Yeah, good evening.
Can you hear me properly, please?
Yes, I can.
Okay. Good evening. My question is about you've been showing us the impulsive wave. I heard that there is a corrective wave pattern, like the 1, 2, 3 or ABC. Please, is that one really necessary, or do we concentrate on just the impulsive patterns?
You are trying to
That's my
understand the
question.
different impulse waves.
Yeah.
Uh, I can't really start explaining that to you, but let me quickly go to the academic portal. If you go there, there are lots of explanation regarding the impulse and the corrective pattern. And you can see that we have right here, we have wave guidelines. So we are first going to be seeing, getting an understanding of how to trade those waves. Then you are going to start looking this one now, this wave personality of wave 1, personality of wave 3, and personality of wave 5. Those ones are what relates to impulse. These ones right here are what relates to impulse. So I can't really go into details of different types of waves, impulse, and all that. If you want to have an understanding, you can just go to the academic portal.
Okay, sir. I
All right.
understand.
So let's continue right now. We are going to go back to dollar index, and then we add a review of what we have concluded right here is that we should be looking out for a rejection around this spot. So with that, you should go to the MT4 chart, and right here we said that we should expect that price is going to go up, but it's not just going to go up; it's going to first confuse you. That is what Forex does. Forex has a way of first confusing people to do the wrong or the opposite of what it intends to do. So if it wants to go up right now, you should not expect that it should just keep on going up. No, it's going to first pull back, then go up. So based on that first pull back, then go up is what we should then have at the back of our mind by the time we are going to the Euro US dollar chart. So let's go to the Euro US dollar chart. Euro USD right here. So you see that the exact reverse of what we have on the dollar index is what we also have right here on the Euro US dollar. So the dollar index has something like this. Let me draw it for you. The dollar index has something like this. It moved up in this manner. That means price did something like this. I think something like this. So like 1, 2, 3, 4, 5. And then the Euro USD, you can see that it did also something similar right here. So you have something that looks like exact opposite of what the dollar index is doing. So if you can have an understanding of what the dollar index is saying, you can use that same understanding to trade the Euro USD. So what we should then expect right here is very simple. Now I'm going to be drawing a trend line. I'm going to be drawing one right here, and I'm going to be drawing one right here, right here. So this becomes my boundary area where I don't expect price to break through for the short stand. That I don't expect price to break through. So that means if I want to be looking out for my buy right now, I will even be happy if price gets to this area. If price gets to this area and then rejects it, I will be happy. I can take that short move to the upside. Or alternatively, I'm not going to be looking for that short move at all because I know that it looks as if you want to be going down. So if you want to be going down, it will be more profitable if you look for a sell signal that is going to be taking you to the next impulse to the downside than looking for that up move. But if you have the trading skills of taking the up movement, then it's not bad. It's going to be giving you how many pips? Going to be giving you about maybe roughly 100 pips, about 120 pips or thereabout. So what we should be looking out for in Euro USD is quite simple. When price gets to this area, if price just do somehow and get to this area and reject it exactly around this spot, you should not be looking for a buy to the upside. No, your buy is supposed to be short-lived. Your buy is supposed to just be a little correction. Then you should then be looking out for a sell around here. The reason is because this structure that you see, if you go through the course, you'll be able to understand that this is a leading diagonal. This is the wave 1, and this is wave 2, wave 3, wave 4, and then wave 5. So with that, the structure of the leading diagonal is that price is going to break below it after some time, giving you the trade setup for wave 2. Then after that, you can then expect that price is going to continue downward. So I'm going to be looking out for this move to the upside. Then if price eventually rejects around here, I'll be looking for my sell downward. That is how you are going to be trading it. Remember that you just don't want to take the trade yet. And if you want to determine where your stop loss should be, well, it's where your your target should be. It's very simple. You are going to be taking your Fibonacci from this end of wave 1 to the beginning of wave 1. And remember that the rule for wave 3 is that wave 3 is supposed to be a minimum of 161.8 extension, Fibonacci extension of wave 1. So I'm just going to set that to 161.8 right here. So that means if you want to get your target, you should be looking at the possibility of price getting to about 1.10552. So our expectation for Euro USD is a pullback. Then we are going to be looking out for a sell from that spot. Remember, I told you that you should expect hope for the best, but expect the worst. That means you should always have it at the back of your mind that price may not exactly do what it's supposed to do. If price is supposed to go up, then we are supposed to get to see a structure that tells us that it's going to go up. So I'm going to clean this one right now, and we are going to look at the possible alternative scenario if price wants to keep on going up. Remember that this also looks like an impulse, and then it means that if price is slowing down, if you're looking at the possibility of a correction here, then an impulse to the upside. So with that in mind, what we then need to do is to assume the different correction patterns that we may have right here and also right here. That means the whole of this area represents the correction that price is going to be making. That means price, if you get to see that price, the wave 2, this stop here and it goes to this area, then you should start looking at the possibility of a continuation to the upside. You're not supposed to take the trade yet. You should try to allow it to come back to this level, giving you something that looks like a 5-wave correction, 1, 2, 3, 4, 5. Then around this spot, you can then start looking for your buy setup, where this is the impulse, then price made the correction, and then the impulse. So those are the two scenarios you should be looking out for the upside or for the downside. For me, I'm going to be expecting price to get to this level, then flush down if dollar index is strong. If dollar index is not strong yet, then it means that euro is going to be stronger compared to dollar. Then you can now be looking out for the impulse correction, then the next impulse to the upside. I hope that is clear. GDP USD. Let's go to GDP USD. Now for GDP USD, for us to have an understanding of what GDP USD is saying, we may need to start from the daily time frame. So let's go to the daily time frame and have an understanding of what structure we expect. As a matter of fact, we should be going to, we should first start from our analysis on trading view. It gives us a broad understanding of what to expect for a very long time. Now this is Euro USD, and then, this is Euro USD, and I've drawn this setup for a very long time. I can't even remember. I think it's 2017, and price is still respecting it. Now, price made this move to the upside. Then we have a three-wave correction, wave A, and it seems as if it's making a wave B, and then it's going to finally come down to wave C. And this is giving us something like a zigzag formation. So let's go to the daily time frame. I think I'm even taking much time. I don't want us to go beyond 6. Okay, so we seem to be having it in wave B right here. What is not clear right now is if price have finished the correction of the wave B and want to keep on going down for the zigzag formation of wave C, or it still has some little move to the upside. So what I explained to you then before is that if we want to go to the upside, then this is going to be regarded as the impulse. Then we should be looking out for a correction right here. that will take us to the next impulse, possibly to complete the wave B. But if price is not going to be going up anymore, then we should be looking out for something that will look like this. Then we should be riding the trade all the way down to wave C, completing the zigzag formation. So let's go to the 4-hour time frame. I think we don't have much problem with Euro USD. The one we want to look at now is GDP USD. So for GDP USD, I've also done this setup for a long time now, and the same concept is what you should have in mind. Let me just first remove this, and you can see that we seem to have impulse. Price made a correction right here, then it made impulse, and it's looking more likely that it's making a correction right here for the next impulse. So if you have that in mind, it makes it very easy for you to have an understanding of what to be looking out for. So right here, what I had in mind before was another zigzag, where we have 1, 2, 3, 4, 5 completing the A, then a correction pattern for the B, then I'm expecting 1, 2, 3, 4, 5 for the C. So we don't know yet if price is going to be giving us an expansive diagonal formation, where you have the A, B, C, D, E, and price getting up to this level, or it has completed the 2-wave correction, in which case you already had 1, 2, 3 wave corrections, and then all of this represent the wave 1 and wave 2, then wave 3, wave 4, wave 5. Remember that when US dollar is strong, it means that GDP USD is going to be selling. It also means that Euro USD is going to be selling. So if we are able to determine that dollar index is strong, then we should be looking at the possibility of price getting all the way down to this level. So for me right now, let me go to the MT4. So this is what we have on the MT4. So what I'm saying here in essence is this. I'm going to take it to small zoom. So what I'm saying here in essence is this. If this represents the whole of the wave 1 that I told you before, and then this represents wave 2, then we should expect price to keep on going down for the wave 3. Otherwise, we should be looking out for this expanding triangle formation right here, where price is supposed to go and test this area, and you have your A, your B, your C, your D, and then your E. So the whole of this one representing the impulse, this one representing the correction, then you should be looking out for the next impulse downward. So it is not very clear right now if price wants to actually go up or it wants to start selling from there. But we are going to be able to see it by the time we go to the lower time frame. Let me increase the zoom, and then I'm going to be drawing this and also be drawing this. So we have something that looks like the exact small portion of what we can see on the higher time frame. So this is looking more like an impulse, then price making a correction, then possibly the next impulse. Let's go to the 4-hour time frame and see what we have there. So for the 4-hour time frame, this is what we have. You can see that my RSI also gave me a signal right here for a sell, that there's a divergence around this spot. And based on Elliott wave structure that I explained to you before, that this was an ending diagonal structure. You had your 1, 2, 3, 4, 5, then price sold off from that spot. So it's looking more likely that even if price wants to go up, now it's clearer. Even if price wants to go up, it may first get to this area right here before it then plans to go the up, and then completing the wave E of the overall expanding triangle that we explained before, then flushing out from that spot. So what we then need to do right now is that by the time we go to the 1-hour time frame, it will also be clearer. But for here, what I can see is that there's a possibility that price is making a shoulder pattern. This is the head, the shoulder, and it's going to most likely come back all the way to this area, then flush down, giving us the proper, that's a 3-wave correction before flushing down. If we go to the 1 hour, let's go to the 1-hour time frame right now, and it's supposed to be clearer. Remember that in the Euro USD, we are expecting the same formation, that when price goes here in the Euro USD, it's making a correction for the wave 2, then expecting to go down from that spot. So the same thing is what we should be looking at for right here. Price is most likely going to be getting to this area to give us a three-wave correction and then possibly flush out from there and gives us a big shoulder pattern. So what we have been able to get so far right now is that Euro USD. Let me go to my my plan. Euro USD. I'm expecting expecting a pullback, then sell off. So this is what I'm expecting on Euro USD, and the same thing is what I'm expecting on GDP USD. Expecting a pullback, that means price may most likely first go up, then eventually start selling. So let's go to the yen index. With the yen index, we'll be able to have an understanding of what to look out for in Euro JPY, GDP JPY, and USD JPY. Yen index. Let's go here. Yen index, JXY. I don't think I have JXY here. JXY. So this is what we had on the yen index. And if you remember that I told you last week that it looks more likely that yen is going to be strong. And the reason is the same thing that we've been talking about. Price has made its impulse, then is in a correction phase, then after that it's supposed to make that impulse to the upside. And this was eventually what happened. Look at this candle. By the time we go to the lower time frame, you'll be able to see it clearly. Let's go to the daily time frame. So this is the daily time frame, and we seem to be having something that looks like this. So what I can see right here is that it's either price come all the way down here to give us like a three-wave correction, then go up, or it's going to get to this area and do something like this, where you have your inverse shoulder pattern and then flash up. So they flush up. So all indication is pointing to the fact that yen is supposed to be strong going forward. With that in mind, we can go to our chart on the Euro JPY and GDP JPY and look at what to expect going forward too. So we are going to start with from the 4 hours or daily time frame right here. Let's start from the daily time frame so that it will be clearer. And you can see that we had a sharp pattern that gave us a sell signal around this spot. So what you should be expecting is that there's a possibility that price is going to be slowing down here a little, then come all the way down. Let's go to the 4 hour time frame. Let me just even clear out this harmonic pattern. It's making it slow a little. Okay, with this right now, if price is going to keep on going down, then it means that we are going to be respecting this one, this three-wave correction, as the first move to the downside, and then we may possibly expect it to pull back up a little, then flush down. Now, if it's going to go up, then we are going to be taking the whole of this to be the correction pattern. That means if you see that price keep on going up, all the way to this area, then the structure has changed. You are not supposed to be looking for a sell anymore. You're supposed to be praying for it to come down to somewhere here a little so that you can be in the trade for the next impulse to the upside. But I don't see that possibility happening right now. What I can see is the possibility of the correction and then downwards. GDP JPY. So the same structure is what we have here in the GDP JPY. We have the three-way correction, which is what we call the WXY formation in the Elliott wave setup. And for you to know that price just didn't get here and just reverse, no. If you take your Fibonacci and measure it from this low to this high, you'll be able to see that that area, this exact area, was the 161.8 Fibonacci extension right here. You can see that price goes exactly around the 161.8 and then reverses. So you may expect that price is going to go up all the way to this level, then possibly give you a complex correction. Nobody will know. Nobody knows the kind of correction pattern you are going to have, whether it's going to be a simple correction or a complex correction. Then from there, you can expect for that push to the downside. So the same setup is what we should expect right here. We are expecting a pullback and then a flush downward. Same for Euro JPY and same for GDP JPY. US dollar JPY. I don't know. I've actually been avoiding trading US dollar yen. And the reason for that is because if I take it to, let's go to the trading view so that you understand why for some time I've actually been avoiding trading the dollar yen. Now, this is the dollar yen, the dollar yen trade setup. And right here, we add something that looks like the same thing that I've been telling you before. Price made this impulse, then we are in a correction phase. And I do not know, as at that time, I do not know if this correction phase is just going to be a WXY, that's the three-wave correction, and go up, or it's going to come and test this area first, then go up. So immediately we start trading in this zone. I just decided to just leave out US dollar JPY. But now it's becoming clearer because of this candle that we can see on the weekly time frame. This candle that we can see on the weekly time frame, that this candle is a very big, massive sell to the downside. It's a close below this candle right here. We give us that sell that we are looking for to the downside. So if you go to the daily time frame, let's see if we are going to be getting it clearer. And you can see that all this Y, the structure of US dollar JPY is not clear. So for me, I want to still stay out of USD JPY until possibly if it gives something like this. If it gives me a three-wave correction around there, then I can look forward to taking that sell. Right here, we are going to go to USD JPY right here. So let's go to the 4 hours time frame, and this is what we add right here. Price has made an impulse downwards, and it's looking more likely that it's going to be correcting all the way to this level. If you want to go down, then it's supposed to correct all the way to this area. That means get to this area. So if it gets here, then I can look forward to selling it. The reason is because, as you can see, it looks more likely that price is respecting this line that I just drew. You can see it looks more likely that price is respecting this line. So the best area where you're going to be looking for a sell on USD JPY is the retest of this same area. If it gets here and rejects it, then you want to take that sell to the downside. So it's still the same thing. I'll be looking for a sell setup on USD JPY. Sell setup after approval. So some people will just wonder, how come you are just going for sell? If I take you through the trade that I took this last week, you can see a majority of the trades right here are sell. I don't know if I'm sharing the screen. Okay, I'm supposed to be sharing the screen right there. What can you guys see on your screen? What can you guys see? You're supposed to be seeing my my MT4 trade. Oh, it's still taking you to MS Word. Okay. Let me just pause it and then we share, new share and okay, I was logged out. Can you confirm my audio? Is it good? Okay, so I was saying that you can see that most of the trade I took last week were also sell, apart from when I was trying to buy GDP card based on the structure I could see there. You can see GDP JPY, GDP card, GDP JPY, apart from this GDP card where I took buy and sell later on. In fact, it even gave me loss eventually. But the rest, I was just selling GDP USD, GDP JPY, and Euro USD. So you can actually have price giving you a whole lot of the same direction for most of all the currency pairs. So for now, I'm going to still be sticking with the same thing that have been trading this last week, which is that I've been selling Euro USD, GDP USD, Euro JPY, GDP JPY. All that I just need to do is to wait for a pullback. Then if I get my sell entry, I'm going to be triggering my sell. So the next sector we want to look at is US dollar CAD. And for us to have an understanding of what to expect on US dollar CAD, we need to go to our crude oil chart. So let's go to the crude oil chart and see crude oil, US oil. Okay, this is the setup we had on the crude oil. What can you guys see right there? I think I'm not sharing the right screen. So can you guys see the US oil chart? Okay, yeah. So the trade setup that we had here before, I explained this to you. I just haven't updated it. Let me just take out this, and then let us see. So this is where I explained this to you that this is where the wave A eventually ends, and that we may expect a pullback for wave B, giving us a zigzag formation, 1, 2, 3, 4, 5, then a 3-wave correction, then another 1, 2, 3, 4, 5, up to the wave C. So we should expect that US oil is going to sell off a little. It may not sell off up to $19. I'm expecting, let me just look for the Fibonacci ratio of this area for me to know where it's going to get to 38.2. Let me check the 38.2, 0.382. Okay, right here. Okay, so the B level might actually even get to somewhere around here. If it's going to make a deep correction, that it can get to the 61.8. But the first level that we should be looking at for where price may get to and reject is the 38.2. When price gets here, you may then start looking for a possibility of another upward move. So the reason why US dollar CAD has been selling off was because of this move to the upside. Look at price went up and then US dollar actually the US dollar CAD actually went down. And there's a reason for this. If you want to understand the reason for this, just go to the academy, and under the academy, read currency correlations. Under currency correlations here, it will give a good understanding of what the relationship between US dollar CAD and crude oil. So let's go to our chart, MP4, and then go to the crude oil chart. So this is the crude oil. This is the crude oil, and you can see that price goes to that area, and it's looking more likely like it was filling up a gap. I don't even know whether one gap is there or not. But if you go to our 4-hour time frame, it will be clearer. And as you can see, the RSI also has started giving us the possibility of a sell setup around that spot, but it's not supposed to be for long. Now this is the 4-hour chart, and you can see that the divergence on the 4-hour chart is even quite obvious. Price was moving upwards, and then your divergence was slowing down, giving you an indication that price is going to reverse. It's supposed to reverse from that spot. So what do we expect from this area? It's very simple. Price seems to have broken from this setup that you can see right here, and then we need to see that it's going to make a correction. The first correction level that I can get to is here, and then the second correction level that I can get to is this area. If you take your Fibonacci and measure it, you'll be able to get exactly around the 23.6 right here. Then this is the 38.2 I told you about, and then the 50% level right here. So the only thing we just need to first understand here is that there's a possibility that price is going to come all the way. It's going to pull back. It's going to go down a little right here. It's going to do this. Then if you want to come to this level, it can just give us a slight correction right here, just as it did right here, then come all the way down to this spot. But one step at a time, let's first try to see if we get this move to the downside. If this move to the downside happens, then you can expect the reverse on US dollar card. Let's go to US dollar card. US dollar card right here. And we are going to go to the 4-hour time frame. And we already have the reverse right there. We already have the reverse. I'm going to switch up the harmonic pattern indicator. It's making it slow up a little. Let me just take it out. Okay, so we already have an indication that price reversed right here, which is what you can see. Price reversed and went up. And on the 1-hour time frame, it clearly gave us a divergence setup. Price was moving down, but your RSI was already showing you a reversal formation. So what we should be looking out for right here is quite simple. If price wants to go up, let me go back to the daily 4-hour time frame or the daily time frame. What we want to try to see is to understand to what level price is supposed to correct to before it keeps on going down. You draw your Fibonacci from the high to the low, and then you can recognize this area as the first area where it may get to and reverse, and then this area as the second area where it may do a deep rejection, a retest and reverse. I will be very happy if we get to this area, in which case we are going to be having something that looks like this for the next move to the downside, testing this low right here. But if it's not going to be getting all the way to this level, then it means that we may actually be having it here and price giving us a correction all the way down. But I can see the possibility of a 3-wave correction. That means price making this move to the upside, then making a correction, then making this move to the upside again, then eventually coming all the way down to test this low. So based on this structure right now, we can then have an understanding of what to expect on the 4-hour time frame, the structure of the 4-hour time frame. Let me take out this. The structure on the 4-hour time frame and also on the 1-hour time frame. On the 4-hour time frame, it has made this move, then is most likely going to be giving you this correction and then making the 3rd wave movement. The reason for this is only if US oil, that's the crude oil, the crude oil is weak. If the crude oil is not weak, then it means that price is going to keep on selling off from this spot. The same structure is what I'm going to be seeing on the 1-hour time frame. On the 1-hour time frame, it has already done this and it's most likely going to be doing this, then coming all the way down here and possibly spotting a little, then blasting off for the 3-wave correction. So if I want to take this trade, I'm going to wait for price to come all the way down here. If price come all the way down here, if price come all the way down to this area, then it should be a very good area where I'll be looking for the buy setup, giving us a 3-wave correction, impulse correction, then impulse. So for me, I'm going to wait for price to come to test this 1.352, to test this level and then reject it. So that will be my setup. Wait for price to reject 1.3, then look for buy. Otherwise, wait for the sell setup. So this is what I'll be looking out for on the US dollar card. Now for the GDP card, this similar structure is what we'll be looking out for the GDP card. Let's go back to our chart, and this time around we are going to be looking at Brent, that's the UK oil or Brent oil, and we expect to see something similar right there. You can see that we have something similar, just like the US oil. It got to this level, then pull back a little. They're most likely going to continue later on. If it goes to the Brent oil. Do we have the Brent oil right here? Okay, we have it right here. Let's go to the 4-hour time frame. So this is what we have on the 4-hour time frame. It's looking more likely that price has broken below that trend line. And if that has happened, then we should expect that price is going to be selling off up to at least about the 38.2 Fibonacci retracement level, somewhere around here. So you may have something that looks like this, price coming all the way down here, then possibly rejecting it and coming all the way before then going up. So it may be giving us another correction right here before the next impulse to the upside. Now, if this happens, it means that we should be expecting GDP card to go up. So let's go to our chart and go to check GDP card. So this is the structure that we have on GDP card, and you can see that we seem to have something that looks like the reverse of what we can see on the Brent oil, which is a possibility of price moving in an ascending channel, so to say. So you can get something like this, then coming down and going up, then eventually flushing down. The reason for this is because we've had something that looks like an impulse, and this may most likely look like a correction pattern, after which we should expect price to then go down from there. But for me, this trade structure, this GDP card, is not really a very good setup for me to take. I might just try to see if I can get into the trade and get about 200 pips from that spot. If you want to get your TP level, let's go to the 1-hour time frame so that you see how you set your TP level. So for a TP level, it's quite very easy. And as a matter of fact, we even seem to have something that looks like an harmonic pattern right here. And it is a sharp pattern. I think this level should be the 88.6. It has not gotten to the 88.6 yet. So like I said, I'm not going to be training on whatsoever. But this is the level at which you can be looking out for price to get to right here. Then if it gets here, it's going to make it look as if it has broken this trend line, and some that doesn't understand structure will start looking for sell. Meanwhile, if you understand the old structure that you can see right here, you can see that you are in an ascending channel that may most likely still go above this top before then selling off. So we may actually be having something that looks like this: X, A, B, C, and D right here, somewhere around here. Then we should be looking out for our buy. So if you want to take your target, you're going to measure from the high to the low, and you're going to be targeting the 127.2 as your first TP, and most likely the 161.8 if price is going to extend forward. So I'm going to set that one to 127.2. So this upper triangle trend line is where you should be looking out for your TP, something that may give you about 220 pips. So for me, if I want to take this trade, I want price to get to, let me plug my harmonic, my pivot level. Okay, I think it rejected the weekly pivot point. Let me check the monthly pivot, weekly pivot, and monthly pivot. Okay, the monthly pivot is not applicable in this case. So I'm going to be looking at the weekly pivot and the midpoint of the weekly pivot, which is this. It's just a confluence. So if price gets to this area, then I'll be looking for a very good opportunity to sell it. Otherwise, I want to just to buy from that spot. Otherwise, I want to just free it. So wait for price to reject. Wait for price to reject this, then look for buy. So that's what I'll be looking out for in GDP card. Now, Australian US dollars and Australian JPY. I think we still have lots. I'm not going to be wasting time much anymore. I'll just quickly go through it very sharply, and without going to the trading view, we are just going to Australian US dollars. I've already explained to us for this Australian US dollars that we expect price to get to this level, then possibly go on from there. So So it has made this move to the downside. Let's go to the 4-hour time frame. It has made this move to the downside, but expect it to possibly get to this area. If you get to see an harmonic pattern right here, then you want to go with that harmonic pattern. That means you want to look at possibility of maybe a sharp pattern or so. The reason why I'm very confused about this is because of this spike. This spike that you have right here is what may invalidate the pattern from not being respected. So for me, if I get to see a sell, the price gets to this area, then I may look for a new sell setup. If it gets to this area and starts rejecting around this spot, then I may look forward to that sell setup. Otherwise, I want to let it go. So my sell zone will actually be somewhere around the 0.69365 AUD. Look for rejection around this level. We'll be getting the same kind of structure for AUD JPY. AUD JPY sold significantly because yen was actually strong compared to US dollar. So let me see to what extent do we expect this. For me, I'm going to stay out of Australian US dollar, Australian JPY right now. The reason is because in Euro JPY, we saw the structure that it may most likely first pull up before coming down. In GDP JPY too, we saw the structure that it may most likely pull up, then come down. So based on that too, this one may most likely get all the way here, possibly giving you a double top formation, then coming down, giving you something like a three-wave correction for the next impulse. So if I want to sell this, I may have to wait for it to come all the way down here and then look for my sell at the top. So look for sell around 76.667. Sorry, 76.667. Then Euro AUD. Now, the understanding of what you can get to see on AUD USD and AUD JPY, it gives you an indication of whether oil is going to be strong relative to euro or is going to be strong relative to pounds or weak. So we can see that in that odd is going to be weak for some time. So because of that weakness, we should expect that euro is going to be strong and GDP is going to be strong compared to Australian dollar. So if you go to your chart right here, euro AUD, you already have price moving in that manner, and that means that we should be expecting this. If you look at the trade setup I told you before, let's go to the daily time frame. In this daily time frame, I told you that price is most likely going to be rejecting this area, if you remember. And I told you that we have had an impulse and we are most likely going to be having a correction all the way to that spot, then price coming down, just like we had this in US dollar chart. So price may most likely get to this area before it then try to break below this level. This level is a very key level that has been respected for quite a lot of time. You can see that price has been respecting it quite a lot of time, and it also respected it here. It may most likely just be going up a little so that you can look for a very good number of volumes for it to break below that level. So for me, I'm not going to be interested in buying Euro USD, Euro AUD for now. But if you want to take this trade, this is what you are going to do. You can see that price broke above this level. It broke above this level and it's coming back to reject it. So if it comes back here and rejects it, then you should be looking out for your reversal formation, where this is going to be the shoulder then the pullback up to this level is going to form the head, and then price doing something like this to go upwards the more. So if you get to see this forming, that means price getting all the way here. This is the head all the way here. You may want to take your buy here. If you miss that buy, then you want to wait for it to come down all the way to this area and reject it. If you then reject it, you're going to get a reversal formation for you to go long. So to take this trade, I'll be looking for a rejection at the previously rejected zone. Look for buy. Look for rejection to go long at this level. So that is how professional traders plan their trade. By weekend, you use it to have an understanding of what to look out for in the coming week. And then on Monday, you look at whether price is actually dancing to the tune of what you expect. Then that's why you see that on Monday, volume is usually very slow, it's really very low. But Tuesday, Wednesday, Thursday, you used to get high momentum. And this is just how the whole lot of professional traders do take their trades. Oh, my chart is not showing. Okay, I'm very sorry. This is the chart I was explaining to you before, and I was saying that for the Euro AUD, that we on the daily time frame, the price was actually respecting this zone. This zone quite a lot of time, as you can see, is respecting that zone. It has gotten here too, it's respected it, and it's most likely going to get to this area, reject, then may possibly give you a correction to go down. And based on that expectation, that we still have a possibility of price still getting all the way to this level, you can be looking out for a buy signal by the time we go to the 1 hour time frame. So this is the 1 hour time frame, and I'm explaining that if you want to buy this this Euro AUD, you can see the price went up, then came down, then eventually broke that level. This is the candle that broke that level. After breaking it, it came all the way down, and it's looking as if you want to retest that level that it broke for further movement to the upside. So this is giving you an impulse, then price is making a correction all the way down here, possible impulse to the upside. And I told you that you should be looking out for a possibility of price giving you an inverse shoulder edge shoulder pattern to the upside, something that may look like this. So if you miss the entry here, then you want price to get to this neckline and reject it and come all the way down here and also reject it, then you can look for your buy setup. If that doesn't happen, then it means that if price gets all the way down here and start doing something like this, then it means it wants to go down. So that was what I wrote here, that look for a rejection to go long at 161, 1.635, Then GDP AUD, the same setup that you could see on GDP Euro AUD is what you should expect on GDP AUD. I've already analyzed it before, and it's based on the fact that you expect price to be moving in this ascending channel formation. Go to the daily time frame, you see that it got to a key level, and I gave you that buy setup around that spot. Look at the key level right here. You can see that price was respecting that level, then it got here and respected it. Now, what we can get to see is that price has made an impulse, then it's possibility that we're going to be having a correction for the next impulse to the downside. So it makes it look more likely that we may get to this area at least, even if it wants to keep on going down. So this ascending channel might actually be doing something like this all the way to this point, then eventually coming down. So if you want to take the trade, all you just need to do is go to your chart, maybe the 1 hour time frame, and the price is going to reject this area. You can see that it looks more likely that it's going to be rejecting it. If price rejects this area, then it's going to be giving you a confirmation of going long at that spot. If you go to the 15 minutes time frame, I hardly go there, but let's see if we can get a reversal formation on the 15 minutes time frame. As a matter of fact, my indicator is already giving me a divergence that is occurring on the 15 minutes time frame. Price was going down, and the momentum indicator seems to be giving me a buy setup around that spot. So what can happen eventually is this: price can still do something like this, but I will be looking for a buy setup. That means coming all the way down here. So as it is going down, your momentum indicator is going to be slowing, is going to be showing you some movement to the upside. If that happens, then we can look for the buy setup all the way to the top. And right there, I'll be expecting price to get to the 127.2 zone. That means your TP level is supposed to be around the 113.1 and the 127.2 Fibonacci ratio extension right here. So it's supposed to give you something roughly in the tune of about 250 pips or so. So for Euro AUD, the same thing. GDP AUD, the same thing. I'll be looking at a rejection, a buy setup. I'll just be looking for a buy setup at the current price. GDP AUD. Look for buy setup at current market price. New Zealand USD. I've not been trading this for quite a long time, but let's see what we have there. And we just look at, we're already at 6 p.m. So I'm planning to just round off anytime from now. So New Zealand US dollars. In New Zealand, we have here, and this is what we have on New Zealand. The reason why I don't trade in New Zealand is because the fundamental that drives them usually happen when we are asleep right here in my own country. So you may not really be able to get the movement when you are awake. But what I can see right here is very simple. Price is actually trading in a corrective structure. You can see it looking more like a W right here, then X, then a Y. That like we completed a Y, and price plan to go up from that spot. If it doesn't go up, then it means it still wants to make a three-wave correction for its Z before then going up. But all indications still shows that we are going to be going up eventually. So it is not just going to go up. We are going to be looking out for our reversal formation for that up. If you look at this spot, you see that we have an expectation of where price can get to first, then reject, giving us an inverse shoulder pattern formation for the overall setup. Or if it doesn't get to that level, then it's going to be giving us this formation. That means price is going to be trading in this manner right here, then break out in that spot. So what we should be looking out for actually is a buy setup. So we go to the 4-hour time frame, and then we try to see if we have a buy setup there. So right here, we have had an impulse, and it's looking more like we are going to be having a correction. And there's a possibility that we are going to have an harmonic pattern right here, something that may look like this, X, A, B, C, and D, but I'm not going to leave it. So if price is going to respect this zone, you don't want to take the buy setup now. You want to wait for price to retest this area. If it's going to be going up, it's going to be giving you that corrective structure where it's going to go up, then see come down a little. The problem with most forex traders is that we don't usually wait for the completion of the setup, and by the time we take the trade, it first goes in our direction like this, then goes against us. But because we don't understand the structure, we close it out of panic, only for you to then see that it then keep on going up and up. But if you understand the structure, you'll be able to know that the trade is still valid and you just only got in quite early. So what you just need to do for now is to try to see if we can get a confirmation of this area. That means price getting all the way here, coming back here, then rejecting it from there. So for now, we are going to wait for the buy setup to be completed. That is what I'm going to be writing on the New Zealand. Wait for the completion of the buy setup. For card gateway, I'm not going to be discussing about this because I don't plan to trade it anymore. But if I get to see any other setup, I'll give it to you guys. Let's quickly go to gold and Bitcoin. We've already done crude oil, so we don't need to disturb ourselves about that anymore. So gold. For the gold chart, we may need to go to our trading view and see the level at which we are in gold. And the structure is still standing. That means that we expect price. Okay, before we know whether price is going to respect this zone or not, we need to first understand what we have. We need to first recall what we said or what we agreed on under the dollar index. The dollar index, the reverse of the dollar index is what you should expect on the gold chart. So in the dollar index, we got to see that there's a possibility that price is going to move to the upside. That means price came down. After coming down, then it makes a reversal. Then it looks as if it wants to go up. So based on that, you can see that we have something that looks exactly like the opposite right here. Price went up, then it made a correction right here, and it made a reversal from correction. This area right now is going to be our reversal formation. After the reversal formation, you may expect price to then come down. So we're expecting that price is going to be selling off, and in fact, a whole lot of traders have been in gold trade and expecting it to sell off for all this while, and it's not selling yet. It's because the reason why it has not been selling is because all the while gold has not been strong, but it's looking more likely that gold is going to be strong. So there are two things you need to be looking out for right now. If price still wants to go up, that means the reversal formation is not yet completed, then you should expect that this is going to be giving you a correction pattern. That means move to the upside, then price coming all the way down here. Let me use another color. Price coming all the way down here, then continue the move to that upside. But I am not expecting that price is going to continue bullish because of the overall trend that we can see. The overall trend that we can see on the weekly time frame suggests that we are supposed to start looking for a reversal formation. We had 1, 2, 3, 4, 5, and then we had the A, the B, and then the C. Then we are expecting that price supposed to reject from that point onwards. So this is looking more like a very steep ascending channel right here. And the maximum is supposed to get to is somewhere around here, then flush down. So based on that, we can go to our MT4 and look for where's our gold chart, the gold chart. I usually just if I can't find it, I may have to quickly just use one. Let me clean out this. Let me clean out this New Zealand JPY and change it to gold. Okay. So from the daily time frame, we seem to be having. Let's try to understand what is happening on gold. Let me first switch off that one. We seem to have had a divergence that happened right here. That price only respected a little, then it went up. So what we should be looking out for is a reversal formation right here. That means price possibly giving us a 5-wave correction, something like this. That means this one is our wave 1, the wave 2, wave 3, wave 4, and then possibly price going up for wave 5, then after that flushing downwards. Or if this is going to be the end of the move right here, then this is going to be your first wave, wave 1, this correction wave 2, then it breaking below this level and coming down wave 3. The fact that we expect dollar index to be strong gives us more hope that gold may eventually start selling from that spot. So the only reason why I've not been giving gold signal all the while is because this does not look like an impulse. If price wants to go down, then it's not supposed to just give us this small movement. The power to the downside is supposed to be strong. So what I can see right here is possibly a three-wave correction, which may most likely tentatively be our wave 1, and then this being the wave 2. So if price doesn't go above this level, we should be looking out for a flush downward. The maximum is supposed to get to is here. That means the price can get all the way down here and flush down. And we are going to be having something that looks like the harmonic pattern, the sharp harmonic pattern, something that may look like this. So for me, the best setup actually is to wait for price. Is to wait for price to get to this area. That means I'm looking at the possibility of 113.1% Fibonacci extension for the sharp pattern. So I should be looking for this. Push to this level, then flushing down all the way from that spot. So for now, if you get to see that price, if you get to see that that gold give you something like this, then it means you want to go up. You want to be in the trade from this spot. Or otherwise, if you want to go down, then immediately price open, the market open on Monday morning, you may start getting to see something like this. And then you want to take the trade. But for me, I will prefer the one that it will first go up, then come down. That is what I'll prefer. The last one is going to be Bitcoin. So for Bitcoin, I don't think the formation for Bitcoin is even quite hard for us to understand. Bitcoin, BTC. Okay, so this is the trade setup for Bitcoin all the while, and we add an ABC right here. Then we have something that looks like a correction pattern, price moving up, trading in a correction pattern, then possibly moving up. When we get to the daily time frame, the chart and the wave count there is clearer. So for the wave count here, we have price moving all the way to this up, then trading in a sideways correction and expecting that price may get to this area first before it then moves to the upside. But it has been slowing down. It's not really moving the way I was expecting. I was expecting that it's going to give a fire push downwards, 1, 2, 3, 4, 5. So if it's not going to be doing that, then we may most likely be looking for the reverse. That means if this one wants to go up, then this has made an impulse, then we most likely get to this area, then break out from that structure. If you go to the 4-hour time frame, we should see it clearer. 4 hours. Okay. So for the 4-hour time frame, I gave this setup then that price is going to come all the way down here, then this way too. I was expecting it to come for the wave 3. That didn't happen. So there are two things right now. It's either we are in a complex correction pattern in wave 2. That means this C being in wave 1, then price still in the wave 2. You have one, your X here, 1, 2, 3, then 4, and they're most likely going to go up for 5 before then flush it down. That means we have a complex wave 2, or it is actually going to go up. That means this is the impulse, then price coming all the way down here, then going up further. So what is the position right now is quite very simple, which you need to just look at right now. Anything that it's going to do, it points to the fact that it's supposed to come and test this area. So what we need to try to understand is what price level, what is the price zone of this. Let me use horizontal rate. So we are saying that it's supposed to test around the 8,600 zone. So even if it wants to go up or it wants to come down, it's going to give us that indication by the time it gets to the 8,600 level. So if you want to look for the buy setup, we need price to get to this area and reject it. That's when we can get that buy. So if you want to buy, you are not in the trade now, wait for it to get to the 8,600, then look for your buy. But if you are already in a trade, especially if you are looking for a sell setup, if you have sold somewhere around here, then you want to take your profits around this point and look for whether price is going to be breaking down further or it's going to be going up from that spot. So all indication is still pointing to the fact that it's supposed to get to the 8,600 zone. So I think we are done for the period. I don't know if you have any questions. For gold, we want for Bitcoin, we want you to test the 8,600 zone. So time for questions. Do we have any questions? I think we'll just be ending it by 6:30 The next 15 minutes will be to address questions. Any questions? If you have any question, you can raise your hand or you can set it in chat and make sure you are in a very quiet place. So I think Sam is raising up his hand. Yeah, hello.
Hello, are you hearing?
Yeah, I can hear you.
Yeah, please, I joined late. I don't mind if you can watch the video again, if you can send us a copy so that we will watch it again.
Yes, sure. I'm going to send the recording. I think it's being recorded. So I'm going to put it on YouTube and you can watch and you can even share it with your friends.
Okay, no problem. Thank you.
All right, yeah. Any other person, any question? At the end of this period, there's going to be a poll, like a survey. You're just supposed to quickly answer the questions based on the webinar that you just had today. So any other question? If there's no question, then I think I will just end the webinar. And then I'm going to do the recording and put it on YouTube. You can follow Club 9 Forex on YouTube so that anytime I post a video there, it will be it will alert you. Okay, Adeyisa says he has a question. Yeah. Hello.
Hi, how are you?
Yeah, I'm good.
Can you hear me? Yeah, quick one. Because I noticed that on your trades, you don't have stop loss. I'm just wondering, why is that?
Okay. Have you been following my trade signal? If you observe that I usually put signals, stop loss and targets when I give signals. Now, my understanding about the forex market is if you are not going to be on your chart when you are trading, then you can apply the stop loss. But if you are going to be on your chart, most of the time when I took those trades, I was right there on my chart and I took the trade and I was watching it. So if price eventually gets to the invalidation zone, I can close manually. You understand? I understand the way price moves and I have my expectations. So why will I be putting a stop loss when I'm right there on the chart? But if now, or if I'm going to be off my system, then I want to leave in. As a matter of fact, I'm still going to do another webinar that explains how to quantify your risk. That means how do you know what loss size to take and how to know how much you have risked so far, where to put your stop loss area. But if you want to know how to put your stop loss, is actually there's a course that explains that under the is it the pro trading course? No, price action trading course. Price action trading course. How to correctly position your stop losses. It's right there.
Okay.
All right. Any other question?
Yeah, that's it. Thank you.
Okay. And the name of the YouTube channel is Club 9 Forex. Just search for Club 9 Forex, and if you're able to get Club 9 Forex, just follow it. Whenever I upload a video, it will alert you that there's a video that you can watch. But I'll still post the YouTube link on in the group. So someone is saying, sir, please, can a scalper use this pattern? Yes, a scalper can use this pattern. And if you are scalping, it means you are taking your trade on the 1 minute time frame or the 5 minute time frame. Now, the same concept all the way down from the weekly time frame applies down to the minute time frame. The same thing, the trading psychology in the mind of the trader that are taking trades on the higher time frame is the same trade psychology that is in the mind of those that are scalping. The only problem with scalpers is that the ones that lose money are the ones that fail to go to the higher time frame to try and understand the trade setup on the higher time frame before trying to scalp it on the minutes time frame. So for you to be a scalper, you need to first understand and be able to link the trade setup from the higher time frame down to the lower time frame. I hope that is clear. So I think there is no more question, and then we'll end the webinar right now. If you have any question, I'm in the group, and you can send me chat any time. So you guys continue enjoying the rest of the weekend. Cheers, and appreciate it to you guys.